So the note that we're talking about, the Nomura note that came out yesterday, spoke about increasing discounts in the small car segment because of a fall in demand. Nomura says that discounts have gone up by almost 15 to 30,000 per model compared to last year. And this, they say, could impact profitability as well. So we find out with the largest player in this space, Maruti. Shashank Srivastava, the Senior Executive Director, Marketing and Sales at Maruti, joins us now. Mr. Srivastava, good morning. I wanted your thoughts. Have discounts gone up that much? And is it also because demand for this segment is waning a bit? I mean, there is this K-shaped recovery that we're seeing across the board, right? One pocket of the market is doing extremely well, which is the premium end, but the lower end is just sulking for a long time now. Your views?
Yeah, so a couple of things, quick points I would like to make.
Sure.
First is that, discounts are really a function of the gap between demand and supply. It is not really a function of one-sided variable of demand. So if the supply is larger than the demand, there will be discount, even if the volumes are large. So to say that the smaller cars have larger discounts and therefore there is no demand is not correct. In fact, if you look at the April-November current financial year, the top 5 vehicles in the industry are all small cars. The top one is WagonR, followed by Baleno, Alto, Swift, and the Desire. So the demand cannot be related directly to the discount. It is that the supply of these vehicles have fortunately been higher, and that has led to the higher discount levels.
Just one follow-up. Sorry, Mr. Srivastava, just one follow-up, because you had mentioned in November, when we spoke, that the production was impacted because of supply constraints and you're likely to see a higher shortfall in December. Just wanted to understand how much lower can the December production be relative to November, and would this chip shortage continue in Q4 and beyond? I mean, just to get an understanding of how things could progress.
Yeah, so the chip shortage, I've been saying, and I think in the last interaction we had, Sonia, we had this, that while it is 95, 96%, almost there, but that 4 or 5% matters a lot. For that, there is very little visibility going forward, and as a result, it's difficult to predict exactly when the semiconductor thing will go away. Clearly, it is still there, especially in some models. Remember, the chips are not just semiconductor components, or not just they are not generic in nature. They are also model specific. So we have found that in some models we have seen smaller production, and hence no discount, and also, in fact, long waiting periods.
Mr. Srivastava, hi, good morning. It's an interesting way to put it, right? I mean, that demand supply, the way you answer it, so there is greater supply is what you said, but there's not, obviously, demand will not rise up to meet it immediately. I mean, it takes time, and hence the discounting. But could you provide us with some perspective on what is the level of discounting now compared to in small cars? And this is not just with you, but it's an industry phenomenon as compared to, say, 2 quarters back. In any case, the market has been betting on the fact that Maruti's mix will change towards higher-end cars, and that's essentially the reason why consensus expects your margins next year to expand by about 200 basis points compared to where you are now. So just on both those points, level of discounting, relatively speaking, compared to 2 quarters back, and margins from here.
Yeah, so if you look at 2 quarters back, definitely the discounting this month is higher. And that's because of the improved supplies of the models, especially our 1-liter models, which means the Alto, the Celerio, the Espresso, the WagonR, the Ignis, and so on and so forth. So clearly the supply has become better, and the proof of that is that you have seen record sales of these models. In fact, Alto has been the #1 car in September, in October, and #2 car in November. So that is what I meant by saying that the volumes are large. However, if you are looking at an overall trend of the last 3 years, yes, both in absolute volumes as well as in percentage of the overall industry, the hatch segment has gone down. It is now around 36%, used to be about 43% 3 years back. So there is a sharp fall in that sense. However, this year we haven't seen that fall. In fact, it has remained steady at around 36% of the overall industry. As far as the future of the profitability is concerned, of course, profitability is not just a function of model mix, but also a function of the overall cost structure, which includes which includes your material cost. In fact, material cost being 75-77% of any auto OEM cost is obviously the most important factor.
Hi, Mr. Srivastava. I wanted to ask you about a couple of other regulations that will get implemented in 2023, which could have an impact on cost. And I want to understand how well prepared you all are. Now, RD, that's real driving emissions, that's going to be implemented in April 2023. So what could be the cost increase because of that? If you could give us a rough number or some kind of quantitative data. And also the other factor is the airbags. They're going to be implemented, I believe, in October 2023. What kind of a cost increase and is that on? Go ahead, sir.
Yeah, so on the RD, as you rightly pointed out, we have the actually not just the RD alone, but we also have the OBD, which is the onboard diagnostics, which comes in from 1st of April. That is part of the phase 2 of BS6. And you are right, that should increase the costs a little bit. We don't know because it varies from model to model. All I can tell you is that for the petrol vehicles, it would be much lower than for the diesel vehicles. And that is what would make actually the gasoline vehicles a much better proposition going forward than diesel. And that was one of the reasons why we chose to get out of diesel a couple of years back, because the RD norms are the cost of complying with the RD norms for diesel is very high. So you are right, but in some of the models, we have already implemented and made those changes in the product for meeting the RD norms as of 1st of April. Some changes would be made in the intervening period, and that is one of the reasons why we have said that there would be a price increase in January.
Okay, one final question. You had earlier set a target of 50% market share in passenger vehicles. However, for the current fiscal year to date, right, you haven't, in fact, there's a slight fall that we've seen in market share for Maruti. Just wanted to understand what is the market share right now exactly, and do you think it may be hard for you to meet that 50% target?
So it is just above the 42% mark at the moment, okay. April to November. And yes, as I have mentioned, in the non-SUV market share, Maruti's market share has crossed the 65% mark, which is an increase over the previous year. However, our market share in SUV needs to be pushed up, and that's the reason why we have introduced the new Brezza, the Grand Vitara, and we'll be introducing a few more SUVs very shortly. But of course, the overall effect of these vehicles which have been introduced, the Grand Vitara having been introduced in end of September, and a couple of more SUVs which we should be introducing shortly, will actually the full effect of those volumes on market share will be felt over a period of time and not probably this year.
Okay, Mr. Srivastava, thanks a lot for joining in. We thank you on that note, but let's take a quick break. Up next, we'll be joined by